Welcome. This is Steve Brennan, Vice President of Alhambra Investments. Joining me today is Joe Calhoun, CEO of Alhambra Investments. This has been a pretty eventful year when it comes to inflation, interest rates, commodity prices. Where are we right now in terms of those trends, where we are in commodities, inflation, interest rates? What's been going on?
Well, look, one of the things I report on every week is what's going on with the dollar, what's going on with interest rates. And we use the 10-year Treasury note rate, but you can choose any rate you want, really. But I think it's important to know which direction these things are. What's the trend on interest rates? What's the trend in the dollar? And that helps you to determine those trends in inflation and growth and so forth. Look, interest rates are in an uptrend. They've been in an uptrend since August of 2020. They had a period where they fell back in 21, early 21, but then they continued to move higher. Inflation expectations have been falling because real rates have been rising right along with nominal rates. And inflation itself, if you're looking at the numbers, if you look at CPI and you look at PCE, these things are going to lag, especially CPI. They're going to lag the real world. So what you're seeing in the world in front of you is going to be a little bit different than what you're going to see in some of these stats. But I believe that inflation's peaked. When we look at commodities, look, oil prices right after Russia invades Ukraine, oil goes to $130 a barrel. And I remember writing at the time and saying, look, this is not going to last because ultimately this Russian oil is going to get to market. You're not going to cut off the supply. We had a big change in the oil market. And that drives a lot of these commodity indexes, by the way. And that's why I'm highlighting that. So in oil, we put in a war premium, essentially, in the oil market. And that war premium was expressed by what we call a super backwardation. You had the front month or spot prices very high versus the price out 6 months or 5 months from now. And that super backwardation, I think at some point hit close to $20 a barrel over about a 4 to 6 month period. It's huge. Well, all that's been sucked out now. So price of oil has gone from 130 all the way back down to 80 something. I've been writing about this for weeks. Look, it had to come back down. Well, now we're back to a backwardation number that's pretty normal. We're down to about a 50 cent spread between front month and 3 months out. Or excuse me, a front month and the second month. It's normal. So we're back. We took the war premium out. So a lot of that commodity spike we saw in the first half of the year, by the way, it's the same thing with agricultural commodities. We see these energy commodities, oil in particular, had a big spike. Now it's back down. We had a big spike in wheat. It's back down. Corn, all these agricultural commodities, everybody's worried, that you're not going to get this stuff out of Ukraine. And I don't know, maybe we have, maybe we haven't. I did notice recently in a trade report that our exports of agricultural goods has been pretty high this year and quite a bit above last year. Part of that's price, though, so I'm not sure about exactly, what the volume is. But the bottom line is it does look like that inflation has peaked. And I think that kind of makes sense. I mean, like the economy slowed some. The dollar's been very strong. A strong dollar tends to be disinflationary, and that's what we're seeing. That's the big picture. Now, I think that interest rates are probably peaking here, that we've already been up to 348 back in the spring. We've rallied up to around that 330 level now, and it's going to be interesting to see. But if inflation's rolled over, you got to figure that interest rates are probably going to follow at some point. We don't seem to be quite there yet, though.